Welcome, and thanks for joining us for another video in our series about impact insurance. I'm Amy Antczak, General Counsel for Energetic Capital, and today I'm joined by Wei Fan, Michael McGroarty, and Ed Flynn from RVI Group. Can we go around and have all of you introduce yourselves, tell us a little bit about your background and what you do at RVI Group?
Thanks, Amy. My name is Michael McGroarty. I joined RVI in 2007 as General Counsel, and thereafter ran our real estate business before being promoted to Co-Chief Operating Officer in 2018, and then Co-CEO in 2019. I'm responsible for management and oversight of several businesses and operating departments at RVI, including our passenger vehicle group, which Wei Fan, who joined us today, runs. Just a little bit of overview. RVI is part of Group 1001, a group of companies that has over 60 billion of assets under management and 4 different insurance focuses: property and casualty, life and annuity, health, and specialty insurance. RVI is the specialty insurance provider, and its core products are residual value insurance and bespoke risk transfer solutions. As a residual value insurer, we guarantee the future value of planes, trains, automobiles, commercial real estate, and various other pieces of commercial equipment. I'll turn it over to Wei for him to introduce himself.
My name is Wei Fan, Executive Vice President at the RVI Group. I joined RVI in 2007, in 7 years with Mike, to lead the company's quantitative analysis group. And then I became the head of the company's passenger vehicle business in 2018. My career started with J.D. Power and Associates after I got my master's degree in physics from University of Delaware and then a PhD in economics from University of Michigan. My career continues to revolve around the used car valuation, either in the world of research and consulting or in the world of insurance today.
Ed, do you want to go next?
Sure. My name is Ed Flynn. I've been with RVI Group about 9 years. I am Senior Vice President of Commercial Equipment. So with that, I'm responsible for residual value insurance and commercial equipment and aviation side of the business. We typically provide residual value insurance to banks, lessors, and owners to help them meet their accounting or risk management needs. Before RVI, I was a banking and real estate lawyer in New York, and then I had spent most recently 16 years at Bombardier, structuring, financing transactions for commercial and corporate aircraft.
Wonderful. Well, thank you all for joining me today. Really appreciate you taking the time. Now, we've heard a little bit about residual value insurance from RVI, but Mike, could you tell us a little bit about what it is and why it's important?
Sure, Amy. Residual value insurance guarantees the future value of an asset and thereby protects lenders, lessors, and investors against the market value decline of that insured asset. So why is that important? The lenders, lessors, and investors need to be confident that an asset will retain a certain value in order to move forward with the transaction in which they are going to participate. RVI takes the asset value risk out of the transaction.
Great. Now, we know that RVI is an industry leader in residual value insurance. However, I would be surprised if the benefits and impact of your policies are immediately apparent. Can you share a few examples of how that insurance has been used to mitigate risks that facilitate a transaction to help us contextualize? Wei, can I ask you to answer?
Yeah, thank you. I think do have a very good example right here. I remember some years ago, a manufacturer of super luxury cars wanted to launch its lease program here in the US. As you know, for manufacturers to recognize a sale, they can only take a very small amount of residual value risk. And to this manufacturer disappointment, neither its dealers nor the auto finance company are willing to take any residual value risk in the lease program. That leaves a large portion of the residual value risk uncovered. So the manufacturer is scrambling to find a party to cover this portion of residual value exposure. The finance company, which we know for many years, suggested to the manufacturer that maybe you should reach out to RVI Group. So in the end, we were able to cover the residual value risk for the manufacturer and enable the manufacturer to launch its lease program that year.
Oh, that's great. It's so interesting to hear about how that works. And, talking about residual value of automobiles makes me think, of course, about electric vehicles. And when we talk about decarbonization and meeting our climate goals, transportation is a big piece of that puzzle. And of course, we talk about EVs as a part of that because we need to electrify everything. And that's not just passenger vehicles that we drive every day, but also commercial fleets. However, financing EVs is trickier for a number of reasons. What do you think are the biggest risk factors that are constraining financing and leasing of EVs, especially with respect to commercial fleets? And what are some of the issues and risks that are holding back large-scale electric vehicles?
I will point out a few from a personal vehicle side. I'm pretty sure Ed will add, more, and I know that this can be very long. We believe that the biggest risk factor in the EV finance and the leasing is the residual value risk. Because of that risk, the source sets the country residual value really low, if not zero. Sometimes they do set it to zero. And what the consequence of that is that the monthly lease payment for the sales will be very high when the country residual is low or zero. And for lenders who are not sure about residual value, would give a very little value to the used car to the used cars as a collateral for the loan for electric vehicle purchase. And this is particularly impactful for the EV market because for the commercial for the fleet users, their decision is almost entirely based on the total cost of operation, and one of the biggest component of that cost is the depreciation cost, which in turn depends on the residual value at the end of the operation. So for electric vehicles, fleet companies have a hard time to justify a reasonable residual value and making the finance structure difficult to close. And there are others, like I kind of have in mind, like government policy instability and lack of a consumer's acceptance due to, for whatever reason. And then that could be the trade barrier between US and China could have some impact on us in the future. Ed?
So I agree with you, Wei. On the commercial equipment side of the business, so commercial trucks in particular, one of the most significant hurdles we've seen in bringing a new product to market, which is essentially what is being done, is gaining acceptance by the financing community. And all the risks that we just spoke about relate to the risks and concerns of the financing community have in commercial trucking right now for EVs. So one of the biggest things is until a secondary market is readily established, either OEM support or support from a third party is going to be required to bridge that gap from introduction to critical mass in the financing community. And that third party support can and has in the past come from companies like RVI.
Wow, that's really interesting. And I think it's so fascinating that you pointed out that residual value insurance can help with mitigating some of the risk of our potential upheavals in our political system and how that could affect the EV market. That's so interesting. Another question I have is, how do insurers assess and determine the residual value of electric vehicles, considering, not only market fluctuations, but technological advancements?
A very good question, Amy. I want to tell you that RVI is a specialty company specializing in residual value insurance. We do produce our own residual value forecast for all the mainstream brand vehicles, including electric vehicles. We do this on a bi-monthly basis. It's not an easy task for the early generation of EVs. We produce residual value forecasts based on a comparable internal combustion engine vehicles residual value forecasts. Let me use the example. See, if we wanted to forecast a residual value for Fiat 500e, a BEV, a battery electric vehicle, we first forecast the residual value of a Fiat 500e ICE model. To have that established, then we ask the question, to persuade those consumers who bought the 3-year-old, 4-year-old Fiat 500 ICE model, how much discount we have to apply to the purchase price in order for those consumers to switch to electric vehicles.
Right.
And it's not a convenient still, so to drive EVs these days. And that discount was estimated based on the used car price difference we observe today, right? Here's the difficulty here, because if you wanted to estimate forecast the residual value for EV today, you have to do adjustment, because the electric vehicle today in the new vehicle market is much better than those EVs we observed in the used car market that we used to estimate the discount factor.
Mm-hmm.
So how to adjust it is a mix of science and art. But I can see directionally, because the EVs today is so much better, and the charging network is going to be better when those vehicles come back to the used car market. We know that the discount factor for EVs would be smaller, and someday it can become a premium factor.
Right.
As for the market fluctuation, I would say you just can't forecast all those the impact of all those market swings. Nobody has projected the upswing like we observed 3 years ago. You can't predict COVID. Of course, you can't predict the residual value upswing as we observed, and that's why you need a residual value insurance to cover those uncertainty.
Right. There you go. Yes, exactly. That's why we need insurance, because of all of the unpredictabilities that life can bring to us. But thinking about things from the perspective of GreenieRE, our impact insurer, thinking about where residual value insurance can make a difference. Do you have an example of how your product has been able to make a difference in an underserved community?
Yeah, we do have an example like this. It happened this year actually. There's a I call it specialty finance company who specialize to provide finance for electric vehicle for the electric vehicle fleet management companies, or you can call it ride-share platforms. And those, I don't know whether you're aware of this. Those ride-share platforms would provide vehicles for those low-income families who cannot afford to own a vehicle, but they do need a vehicle to get around from time to time. So that and the EV as you know, is cheaper to operate, right? Because the fuel cost is lower, so it's a very, very appropriate to have EVs on those platforms. So this company have a higher funding cost because because of the residual value risk, and so they reach out to us, and we provide a residual value guarantee, for the EV fleet, and they were able to reduce the funding costs and provide more affordable vehicles for those fleet, for those ride-sharing platforms.
That's fantastic. I mean, it's so important that, that people who need cars, whether that's to own and use every day or just to use every once in a while because they can't afford to own a car themselves, everyone deserves to have electric vehicles that run on clean energy. So that's so fantastic to hear. And another question, Mike, I'll throw this question to you.
Sure.
How might residual value insurance for EVs influence the adoption rate and acceptance of these vehicles in the market so that we can have large-scale decarbonization?
Sure, Amy. We're now standing, I would say, just below the precipice we need to summit in order to achieve widespread acceptance of electric vehicles. It's critical that lenders, lessors, investors feel comfortable that the asset risk has been taken out of the transaction in order to participate, and they will look to RVI to take this risk. Although RVI has gained experience in underwriting electric vehicles, as we talked about previously, with its efforts to date, the market is nascent and product advancements continue at a rapid pace, causing future values of electric vehicles to be wildly uncertain. And that leads to risk that is very difficult to quantify. Given this level of risk, RVI will not be able to provide a future valuation that is attractive enough on its own to take the asset risk out of the transaction. During the infancy of this market, there will need to be a risk taker that sits above RVI and takes the risk layer that RVI cannot. And that's the role we see GreenieRE playing. And RVI's ability to underwrite at higher levels will increase over time as the electric vehicle market becomes more stable. And then the need for government support or GreenieRE support will lessen and eventually disappear. However, without that support today, there's a chance that the electric vehicle wave that we're riding right now loses its momentum and the transition stalls, or worse yet, it disappears. But collectively, we can't allow that to happen. And that's why we're working with you all. So thank you.
That's such a great point, Mike. And we really, here at GreenieRE, our impact insurer, we really are looking forward to working together to fill those gaps there where traditional insurance can't take on those challenging risks, like you said. And hopefully we can work together to deploy more electric vehicles, electrify the transportation sector, reach our decarbonization goals. And I think that's what we're all really hoping to do together. So thank you so much for joining me today. I learned so much about residual value insurance and this wonderful product that RVI Group offers, which is really great. If you want to learn more about RVI Group, please head over to rvigroup.com and of course, check out GreenieRE.org for more information about our nonprofit impact insurer for the clean energy transition. Thanks everyone for joining us, and see you soon.